So much excitement around play to earn.
Sega has really jumped on Web 3.0.
Satya came on my show.
I hope that this is the next big thing that happens after the mobile internet.
What do you hope to incorporate the technology into? What is your plan for the future?
Facebook changed its name to Meta.
Game business has been growing thanks to the evolution of technology.
Some gamers don't even want this whole metaverse thing. Do you think this is the future of gaming? And if so, how big a part of that future will it be?
So Web3 definitely can be a potential contributor to that growth.
Danny, thanks a lot for coming on the Proof of Work podcast. I connected with you precisely because you're new to the venture capital space. And I know that me, along with some of our mutual friends, we've been in the Web3 gaming space for quite a while now. And when I say quite a while, it's been like 2 years. And the metaverse and Web3 gaming space is going through a tough time just now. And I wanted to get a fresh take from someone who's new to the venture capital space, new to the Web3 gaming space, to give us this fresh perspective on what to expect and what you have witnessed so far since entering the venture capital space as well. So look, without further ado, firstly, a very warm welcome to the Proof of Work podcast.
Thank you.
And I really thank you for taking out the time from your busy venture capital life at Decasonic to come on the podcast.
No, my pleasure, Shiv. Thank you so much for connecting. I've been looking forward to this chat all week and for getting your experienced perspective on Web3 gaming. It's funny, Web3 is like one of the few industries where having 3 years experience makes you, an old dog and out of date. So I get your learning here in dog years, and then hopefully I can give some back.
I love it. I love how you said dog years.
Yeah.
I've had a lot of dog years, man.
Yeah.
Pretty much a senior citizen now over here. Yeah. Cool.
Yeah.
So look, would love to start by going deep on your educational background first. You studied management science and engineering at Stanford. Can you unpack what that was like and how it informs your thinking today?
Definitely. So management science and engineering is an interdisciplinary degree in the engineering school. And the first part of that is management science, right? So we really look at management as a science. Took a lot of my courses in Stanford's D School, which is known for its design thinking outlook, which is such an amazing school. It's a great program, super unique to Silicon Valley. And it basically teaches creativity as a science and not an art. So it's all about creating assumptions, testing those, iterating, and then a variety of management techniques to keep the team moving, especially in like kind of nimble early stage startups. So that was so much fun. The engineering side of that is a much more broad interdisciplinary engineering degree. So I took some thermodynamics, I took a course on chemistry, a variety of mechanical engineering. Data science is the core of that. So basically, a minor plus in data science and statistical analysis. So it's really an awesome degree that blends the two. And then obviously doing it at Stanford, there's something really special about being in the Silicon Valley when you're thinking and doing all these ways, because there's something in the water that makes you feel like you really could take it and go be big with it.
So look, I'm from the Violets team. I'm an NYU alumni, so I'm not from the West Side. So I'm keen to get your take. Did you ever consider going to NYU or to the Wharton or University of Pennsylvania, or not? You were always like, want to go and study management science at Stanford?
That's a good question. I was actually very close to going to the Naval Academy, which is the U.S.'s college for becoming a naval officer.
Yeah.
And I've come from a military background. My whole family went. I was thinking about going as well. When I got the opportunity to go to Stanford, it was funny because I grew up 20 minutes outside of campus and never thought I'd get in. It was always a pipe dream. It was just this elite kind of bubble that was, that I could never break into. So when I finally got in, it was really like opened my eyes and like what I want to do. Obviously, Wharton is such a great school. NYU is there are so many great ways to do it, but I think I've always wanted to be an entrepreneur. I think as a 13-year-old, I was starting businesses and coding up side hustles. And so to do it at Stanford felt like kind of being in Florence in the Renaissance. And so I went there, but there's so many good ways to go about it.
Yeah. Oh, that's amazing. So you come from a military family. So that would have influenced a lot in terms of your, educational career and your career since graduating from Stanford as well. Because look, I don't come from a military background, but I have friends who come from a military background. Discipline is at the highest pedestal. And that is a great personality trait to have in life in general. So I assume that would influence a lot of your shaping up and thinking at Decasonic as well.
Yeah, no, well said. I like to think that really is kind of core to our, we stay core to our thesis and go from there. But along the way, it's different parts of your brain have been developed over years. And, you work as a startup, it's way less about discipline and way more about creativity, being good on the fly, rolling with punches, but having having that core tenet of just like waking up, making your bed, getting through your day on a regimented process, I think has been such a help. Like that's one thing that I just grew up with and just take with me every day. And it's just like certain things like going to the gym, waking up early, you know, hygiene, personal growth. Take that, make it super easy, make it a habit. You get all your day now to focus on what's actually important. So I think that's really what's been sticking with me my whole life.
That's amazing, man. So look, from Stanford to working in product management roles to being a startup founder, walk us through your journey on how each step led you to where you are today, investing in Web3 and AI at Decasonic.
Yeah, so I would really say I've tried my hardest to take the road less traveled my whole life. So graduated Stanford in 2019, had a job to work as a product manager in Microsoft in Silicon Valley. And so I was set to take that job on Monday. The Friday before, I heard back from another opportunity to be a product manager in Iceland. And I spent the weekend kind of thinking about it, and I realized I couldn't say no to this chance to go do something miles away to a country I've never been to, a country I didn't know anyone at, rather than take this job. So I emailed, my prospective boss at Microsoft, said, hey, can't do it. I can't turn down this opportunity. And I flew to Iceland like 3 weeks later after I got my visa. So, I think the core to that was like, a lot of people ask like, why Iceland? I grew up in California. I'd never really lived in the snow. 3 weeks later, I'm in Iceland in November. And, the thing behind that was just, I didn't want to get stuck in the same place that I've always been. And I didn't want to do the things that I already knew I was comfortable with, right? And so living in my hometown, doing product management, so close to Silicon Valley, I figured there's a world out there that I want to go see. And it's been a much harder path, but it's been so much more rewarding. And we talked about it like learning in dog years. I feel like I've just, as a result of this path, leveled up so much fast. But I started out as a product manager. COVID hit, was determined not to let go of my dreams of like figuring it out in Iceland. So started a company while I was out there. I was constantly musing on ideas. And one of the things that occurred to me was food is so expensive in Iceland. I don't know. Have you had a chance to go?
No.
It's beautiful, but it's so expensive. It was really getting under my skin. So started a startup to tackle that. And we were doing essentially meal prep meals on a delivery and takeaway service for Iceland, and a totally underserved market. So I basically created a company and then sponsored my own visa as the CEO to keep working in Iceland. Grew the company to like 10 or so, and then eventually sold it to a tech firm, a consulting management firm that just bought the tech, exited to the States, and then was working again in product until I found my way to Decasonic, where just this year the timing aligned, where my last company, Fubo Sportsbook, just got sold. I didn't start it. It was just an employee product there. And then I was looking for my next place. At the same time, I was talking to Paul, the RGP at Decasonic, about raising for my next big idea. And he said, well, look, you don't have this idea figured out quite yet, but you're a great guy. Why don't you come work and learn the ropes as a venture capitalist? You'll get much better as an entrepreneur. So that was my door in. I've now been venture for about 9 months, I think. And it's been just an absolute whirlwind. So much fun, so much learning.
It's so funny, right? Like I've also met so many people that have gone from investors to founders rather than like in my network of people, especially in India. And India has got like a very big venture capital market in comparison to Australia, where I've lived most of my life. Like I would say after US and China, India has got the biggest venture capital market out there in terms of the amount of dollars that are getting invested. You should look it up if you have not looked it up.
I didn't know.
Yeah, India is like the third largest venture capital market in the world. I also didn't know about it until I came last year to India. And so India is a big market in Web3 gaming as well. There's a publicly listed company that is worth billions of dollars, US dollars, and it's listed on the stock exchange, and they're in Web3 gaming as well. But yeah, like in my network of people, I've also noticed that there are so many people that started as an analyst or, were like vice presidents within a venture capital firm. And then they moved and started their own startup and they did well. So I've noticed this journey. I think that's a very good advice by the principal, the general partner of Decasonic that he gave you. Very sound advice. That's interesting, your Iceland journey. Iceland would have been a tough market to crack from a entrepreneurial space. It's expensive and not much scale, is it?
No. Looking back on it, I was like, I don't know how I ever thought this would take off. But, we ended up very quickly taking over Iceland, and then had kind of like put our toes in Denmark and Norway as well. So what the nice thing is like it's a totally sheltered market. So any idea you want, if you think it can take hold, you can like get out in front of the entire country in a week. week.
Really?
So in some ways, it's like really powerful network effects. In others, you're just capped at it so much. It's like a testing ground for markets, and isn't actually like the market you want to go after. But yeah, on the investment side, I'll tell you, man, I think every founder should, like, if they can, take some time and be on the other side of the fence, be an investor, write some angel check, be an analyst, work at a venture fund. You just get so many more reps as a venture investor, right? I mean, I've probably seen 1,000 pitch decks in my like short time being here, and you just can't compare with that experience of even like a serial entrepreneur who's launched 5 startups. Only has so many angles and viewpoints on what it takes to make a good business. They've seen 5 top and bottom, but it's hard to just get that number of reps. So it is such a good experience. I'd really recommend any founder kind of trying out the other side. You'll see exactly why people ask the questions they do.
Absolutely, man. I endorse that view as well. Good advice by you, Danny. Now let's talk about the topic of this episode, which is the state of Web3 and crypto today. We've seen a cool down from the hype cycle of 2021. That is when I entered VC and angel investing game in crypto. How are you thinking about the space now versus before you entered the game?
Well said. So I actually had an opportunity to join 3 years ago and turn it down because I was very turned off by the hype in crypto. And for better or for worse, I think today with this reset, it's so much more about substance and the technology, the underlying technology, and what that can do for products, rather than this whole investing in a Web3 ethos in and of itself. So I think there's actually a lot more opportunity today. It doesn't feel like it as founders because money has dried up. It's harder to raise. It's less in the news. But I think these are those moments as a founder that are actually huge opportunities because it's cleared out a lot of the noise and it's focused in a lot of the conversations about, blockchains and real world use cases, and applications that make sense. And I think this Web 2.5 approach, that's kind of where people are landing, is really going to take off.
Yeah. Look, I agree. I think that whole nirvana approach about everything being decentralized, like even every part of the tech stack to be decentralized and calling it the Web3 nirvana. I think the last 2 years I've pointed out that firstly, it's not economical to enabling everything decentralized. There's got to be something that might have an element of centralized. So might as well just call it out rather than to have that marketing gimmick that, oh yeah, we are decentralized. And then over time, people, calling out shots at you that you're not decentralized. This particular tech stack of yours is not decentralized. Don't call yourself decentralized. So that is one element of it. The second element of it comes back to that blockchain trilemma problem. That, if you are going to be decentralized, you're going to be slow, right? No matter how much fancy names you give. That's my humble opinion. You might differ to it, but keen to get your take as well. But that blockchain trilemma still exists. If you're going to be a secure and decentralized platform, you would have to make way for slowness. If you want to be fast, then your blockchain network is going to be fairly not decentralized. It's going to be centralized to a certain extent. So I think what you said, a Web 2.5 approach, especially for Web3 gaming, makes sense because compared to, let's say, money, like the application of Bitcoin is still it being used as money. So if we say that the application of Bitcoin is money, you want that network to be fully decentralized. But for Web3 gaming, which is more of a leisurely activity, you can let go of the network being initially centralized and then over time being decentralized. But for applications of finance and personal savings or money, that needs to be decentralized right from the start. Otherwise, why go through the inconvenience of connecting wallets and self-custody when you already have, centralized platforms, which are banking platforms?
Right. No, that's so well said. And I'll just start at the beginning. It's interesting, kind of like the differences that 2 years can make. I have not heard anyone mention the trilemma problem of, speed, security, and scalability in a year. I mean, it is not what people are talking about. And I think a part of that, is that people are not talking about decentralization in and of itself. And you're so right. It's like, but just as an ethos, as a narrative, founders aren't talking about decentralization as a value proposition anymore. And I think many investors are like, okay, I get it, decentralization, but what? And especially what do users care about, right? So I think, speed is great in that you can transact faster, and decentralization is great, own your asset individually, especially in gaming. So, on a high level, just interesting, right? Because decentralization is now kind of taken for granted, but not as a value prop. And that, it's such a different, I think that's a big unlock because before, there are now 2,500, L1 and L2s, all competing to give you block space on some slight edge on one of the three aspects. And to be honest with you, we don't even look at any of those because, I think block space is not the blocker today. It's use cases.
Got it. So look, this is why I've invited you on the podcast. It's for these insights that I'm also getting, because the network I've got, because we've been in this space for quite a while, right? We are still fixated with the whole decentralization thing. I mean, coming from a 10-year TradFi background, and for us, not just me, but like a lot of other like-minded individuals like me who moved from TradFi to, crypto, decentralization was the narrative that got us excited. So it's very interesting for me now to see that, people who have been 3 years rather than, I've been in this space for 7 years. Like for somebody who's been 3 years in this space and now actually professionally on a day-to-day basis looking at startups, not hearing about the decentralization narrative, that is an insight for me because I'm meeting my kind of people. You're meeting a different sets of people. So that's where the education comes in. So that's interesting for me as well.
Definitely. Yeah. And you know what? There's also so many flavors of venture investor out there as well. So that's not to say it's not top of mind for so many, but we take much more of a kind of a consumer mainstream adoption focus. There are others who really focus on decentralized finance applications, some that take a more academic approach and say, what's the technology that really enables future use cases? We're looking for the here and now. And so it's less so because users aren't asking for decentralization. If you look at users are quick to give up every bit of their data for TikTok, right? For kind of punchy content, I'll give everything every bit of data you want. So it seems that very often decentralization and kind of trustlessness is not the value prop. It's kind of what other things the blockchain can do that are exciting today.
I agree with you. I agree. The majority public out there, they value convenience and speed more than privacy. So I'm totally with you. Tell us a little bit about Decasonic and what the investment thesis about Decasonic.
For sure. Yeah. So great context. Yeah. So we're a $50 million fund out of Chicago and we're lead investors. We're very active. We're very kind of like investor operator, meaning we write bigger checks and then really give a lot of guidance to our founders, try to be as helpful as we can, not to lay out the road for them, but to really be like in the passenger seat and say, how can we help, day by day, being someone in your court. I think that separates us a lot. And we focus a lot on really mainstream applications. And that can be a variety of things. You can have a mainstream application in finance, in DeFi, but we're looking at e-commerce trends, Web3 gaming, as you mentioned, AR, VR, and the metaverse use cases, increasingly so AI agents and how tokenization really enables them going forward. But, we look for mainstream applications. So we look for old people use today. Why is this 10 times better than the products they're compared against to? And generally speaking, decentralization isn't that 10x. It's 10x from a user perspective. Why are they coming? What does this enable?
Fair enough. No, that gives a good description of what Decasonic believes in. And I looked at your portfolio companies. You've invested across gaming, AR, VR, and AI. And these are fields that you believe, that's why you're investing in it. And I also believe are going to transform what it means for this society. There are transformational technologies. So what excites you most? Like what excites Danny most about these areas and why do you see huge potential in it?
So I am so excited to get your take as well and what you like. But personally, I'm a huge gamer. I've gamed my whole life. I love the space because the market is huge. It's bigger than TV and music combined, gaming is as an industry. So there's so much potential to invest. And then, you can never have enough of it. Right? You can never have too much fun, never too much, AI productivity. So I think about gaming, VR and AR and AI as, investing in fun. VR, AR, happy to dive in, I think of as focus. And then AI, I think of as productivity, right? And between those three, there's so much you can do. But what personally excites me is that I am on founder calls now with some of my favorite streamers. If you're familiar, Dr. Disrespect, he's one of the biggest Twitch streamers. He's on the call just the other day, as we were talking about his studio, Midnight Society, and the opportunity of Web3 gaming that he's tapping into. I was like, oh my goodness, this is the founder of Call of Duty, my favorite video games ever, and my, big streamers, and I'm trying to play it cool, not fan out while evaluating this deal in my heart of hearts. I'm like, oh my God, we have to do this one. So that's what makes it so much fun. I think it's just, they're cutting edge fields. As a technologist, as a founder, so much fun to be in the front end of these trends as they emerge.
Yeah, look, I agree with you. So look, I'm actually, a lot of my students ask me that they look at my LinkedIn in and they look at my profile, they're like what you have alluded during the start of our conversation as well, that before we hit the record button, that I've got just a very diverse background. I've just followed my passion. Anything that I like, I, put my head into it. So that's just been my foray. Like, I've always been a people investor, and that doesn't mean that I've always been successful investing. Sometimes my judgment on people have been wrong as well, but I've always been purely a people investor first. If there are individuals that I like, firstly, and then what they are doing, and if they've got the discipline, I back them. And similarly with the network that I create, firstly, I would firstly want to gain respect for them as a professional. And if I respect them for their proof of work, that's why I called my podcast Proof of Work as well, because I believe in that concept, not only inspired by Bitcoin consensus system, but also I believe in that meritocracy concept of proof of work being the showcase of a person's ability. So yeah, I'm a people investor first. And that's why when I got into gaming and metaverse, for me, it was all about a lot of people enjoy this. And look, gaming is very underappreciated as an educational tool as well. I think a lot of problem-solving skills can be attained by playing games, which is, I don't think, highlighted enough. I'm sure there are research done around this as well, but I think gaming is a very good problem-solving skill generator for people as well. So I'm a big fan of games as well, and I know people love it. And as a market, I feel like you also believe, and Decasonic also believe, gaming is still a very small market considering its potential. It doesn't get highlighted enough. I believe it's got a lot of scope to continue getting bigger as an industry. So that's why I'm fascinated by game. AR, VR is, I believe, another of those frontier technology that's it's going to take some time to reach the critical mass. Yeah. For that to happen, it's good that Apple is coming with its headset, because a brand like Apple coming in with their headset is going to create a follow-on effect where other hardware providers are going to take this market seriously. Just like how after the entry of Apple Watch, people started taking wearable market seriously. And then we started seeing a decrease in hardware cost, not in Apple, but in other wearables. And then, critical mass, now we see a lot of people wearing smartwatches. So I think Apple, when they come with their AR, VR headset, and hopefully it is not a flop like Google Glasses was, then we're going to see AR, VR reach a critical mass somewhere down the line. But I think it's far. I'm not one of those BCG consultants who wrote a corporate hitchhiker's guide to metaverse saying that in 2025, metaverse is going to be a $400 billion industry. I don't think AR, VR is going to reach that big of a market within 2 years. I think it's going to take some time, but that's my humble opinion. I can be wrong as well. Yeah. And yeah, you're right. I see AI as a productivity tool as well. And AI, look, I by no means am an expert in AI. I consider myself a student of AI at the moment, but it's just growing at such a scary, rapid pace that, it's just so hard to keep up as to what people are designing with these large language models. So I hear you. It's definitely an exciting space to be. You can forget about having personal time while you're in this game as a venture capital investor, which I imagine would be the case for you as well, just trying to keep up. But yeah, it excites me as well, because it is the cutting edge technology of the day now.
Totally. A couple points there. Sometimes I'm wondering where these numbers come from, out of VCG, and because it must go through the approval process and got signed off on, and everyone does a rough market approximation where they're 2 billion users, 500 million headsets. And then you look at it. Just the other day, there was this number on the opportunity in tokenization is $16 trillion by 2030. And it's okay, I think the opportunity in tokenization today is maybe 50 million, so you're going to add 5 zeros to this in 5 years. I just don't understand sometimes.
Yeah. Look, I'm glad that you also think the same about these management consulting reports and white papers. But yeah, look, this is something that some of my network also share, but they'll probably not go on record to say it because they want to keep their network with these management consulting firms. But I always believe that call a spade a spade. And I think that somewhere, these consulting firms at the end of the day produce these white papers more as their own marketing material to create that headline so that they can attract eyeballs to their content and then can get a phone call to approach their BDMs. But that's why, like, one shouldn't. Here's the thing, and I think you being a VC would attribute to it as well. There are a lot of times, and I'm sure you get this a lot as well, that when you've got founders, with their pre-seed round pitch deck, just got an idea. In order to validate their idea, they come up with these statistics with a footnote that BCG said that's why it's a $16 trillion market, and we believe we can capture 10% of it. So yeah, that's why we're valued at $100 million, and they've just got a PowerPoint slide. And I'm like, you might get investment, but you definitely am not going to get investment by me. That's not the way that I think. Yeah,
I so agree. I think more founders don't realize this, but the that market sizing approach has turned me off of more investments than I count, right? And it's twofold. One is when you're making up these numbers, and two, it's when you find the wrong numbers, right?
Yes.
So they were speaking to a company the other day. They're doing analytics for drones, and said, well, the drone market is projected to be X trillion by this number, and it was well, you're not in the drone market. You do data for drones. These numbers, you just point to the wrong things, and it lacks substance, it lacks trust. So I'm on the same page. I think that slide should just disappear. People have got a rough idea what the opportunity is. I don't think putting billions is fooling anyone on a slide deck.
Absolutely, I'm with you. I think anybody who's listening out there, I know a lot of my students listen to the podcast and they learn entrepreneurship and all that. You're hearing this from a Chicago-based $50 million venture capital fund as well. So hopefully whatever I teach you is getting validated as well from a Chicago-based venture capital investor. So keep this in mind. So look, I'm now interested to get your take that how, we know these technologies are exciting, but let's deep a more philosophical layer into it. How do you think these technologies are going to transform human behavior, both positives and negatives?
Yeah, well said. And this can go so many different directions, but I'll just kind of plant it at AI today and gaming. So our last investment in particular was generative AI for video game assets. I think it's just going to make the creation of games so much easier, 10 times cheaper and faster, that there'll be 10 times more games out there and different ways to have fun. I think everyone can be a creator. I think what it means to be a creator is going to change very rapidly, for good or for bad, right? If you're an artist, this is super threatening. I'll just put that out there. It's a bad decade to be an artist, right? When you've got, robots spitting out beautiful works of art. It just changes what it means to be an artist. So, I think that's bad. I think though the net is, I think, going to be invariably good. And Andreessen has a great article on this, but the long and short of it is that over time, historically has proven that if you increase GDP, everyone wins. So there will be turbulent times as people need to reposition around the technologies of today, but I think they're all growing GDP substantially, and that's a win for everyone. But, what do you think? I mean, do you think are you on the same page there? Or
look,
optimistic?
I'll tell you firstly about what you mentioned. I like what you said about, this has been a bad decade for artists. I'll tell you what, 2019, 2020 were great years for artists who leveraged NFTs because they made a killing with their NFTs. But these frontier technologies, both the convergence of blockchain, smart contracts, and AI, the convergence of these technologies are just updating at such a rapid pace that what was a great time, 2020 was a great time for artists who leveraged NFTs. They made a killing, during that whole NFT summer, even in 2021. But then came AI, and I agree with you. I have no artistic skills. I'll tell you that. I have zero hand drawing illustration skills, but I can go to Midjourney, pay $20, and I'm a good writer. And using the prompts, being descriptive, I can create some magical art out there within seconds. So look, I hear you. Now it's a tough time for artists, and I don't see this Pandora box closing. So what started off as a good decade for artists, thinking that they can use creator royalties by creating NFT loot boxes and can make money out of it for the remainder of their life. Even that part is now controversially stopped with, a lot of these NFT marketplaces stopping royalty payments. I think it's going to be a tough time for artists. And this is what I tell students as well. You just need to get with the other people in the society and start learning AI. You need to figure out what your role is going to be in this AI world, because this is firstly not going to slow down, and this is definitely not going to stop. For anybody who think that this AI Pandora box is going to stop due to regulation or due to, consensus by global superpowers of the world, world, it's not going to stop. They couldn't stop Bitcoin, despite having all the interest of Bitcoin. So they're not going to stop AI.
No, and I'll tell you, as a venture investor, I'm seeing it. It's coming in droves, different productivity tools, and it's hard being an investor because it's hard to differentiate. But overall, I can tell you that one of them per category is going to hit and do super well, and it's going to change it. I think the advice I'd give to people today is stay with these technologies just by using them, right? So if you're an artist, it's really important that you start using these tools to create. Those are the artists that will survive. The ones that will continue to be hired by gaming companies for concept art, or the ones that will have the award-winning pieces and fairs, will be the ones that use these tools and then add a human element and a twist. I think like as a creator artist, it's never been more pertinent to be like with the technology. I think the artists and technologists will like really be hand in hand going forward. And then also with just average day-to-day stuff, you have to be using, ChatGPT as a calculator. Think of it as a calculator. There's a time when you need to learn how to write and not use a calculator. After that, it's like, use the calculator. There's no bonus points for not using this, trying to get to the right answer. And so in that way, it's super productive. But even as it comes to crypto, I think about it too as like, use a wallet, try to buy something and own it and have it secured. You understand the value of something when you can own it and not have Bank of America tell you to own it, that this website tells you it's like you can take this forever, and it's really powerful. And just understand that technology gets you in the top 5% of people just by using it. So you're not behind. You don't have to be creating it. You just have to be using it.
Yes,
that's the key to that.
Great advice, Danny. I'm totally with you. Just start using it. Like, have an open up mind and just get into it. The compound effect of your inputted effort by using these technologies, when you look back at it 1 year later, you're gonna be like, this compound effort of actually just using these technologies is immense. And I think you would agree to that as well. How big of an impact those small compound efforts do to one's career.
Yeah, totally. 3 years ago, I with some friends minted my own NFT collection, and it was like of the planets in the solar system, and sold it for a little bit here and there. It was not some pump and dump, but I think we netted out of like $1,000, but it was like, wow, I know what this is. I know how to mint something. People are buying it. Thousands of people came and interacted. And then as it comes to AI today, like just this weekend, I spent some extra time creating a trailer for a book that I love and what it would look like as a movie. So like I kind of wrote out the scenes that I thought were super dynamic or whatever. I used runway.ai. It's like Mid-Journey, but for like 4-second clips. And then I'm halfway through like creating a trailer, and I can't wait to publish it, but it's just fun. It's just like, oh my God, these are the tools. And you realize quickly that if this is what I can do today, think about what I can do in 5 years. And I'm not a guy who, creates movies.
Yeah. So look, you're a very good sized venture capital fund based out of Chicago. So I'm sure that you would have, partners who are based out of LA as well, network connections and just deal flow part. I'm interested to get your take that is Hollywood worried?
That's a great question. We're actually just talking last week to the Creative Artists Agency. It's like one of the biggest agencies in Hollywood. They manage so many of the stars. They're really proactive about it. I think it's equal parts worry and opportunism. So, NFTs, if you were playing the NFT game, you could have made a ton of money off of like simple JPEGs you didn't even need to create. And so I think some of the agents are looking at it and saying, wow, there's all these new ways to monetize using Web3. There's all these new ways to use our, likeness or voice in commercials that we don't even need to film, and we'll get paid. And so it's like, great. On the other half, it definitely, I think what you're seeing is that there's just so much content out there. Like if you can generate it up, there's going to be so much. It's always been such a cutthroat, competitive, top 0.1% of people actually make it in Hollywood. And I think there's just going to be even more competition. So I think they're worried. The writer's strike today is like so case in point. But to be honest with you, I don't think Netflix or Warner Brothers or any of these big studios are that worried. I think they've got a lot of the leverage today. Based on kind of my understanding of following the strike is, we'll see how effectual it will be. I think there will be some compromise, but it rather be Netflix than the creative union today. That's for sure.
Got it. No, makes sense. I was on the same page that it's more like the people, like the everyday people working in the Hollywood industry, rather than the top dogs, decision makers who care about the profits and are directly responsible for it. I think those individuals for the short term would be happy because these tools mean less production costs.
Right.
For the everyday people who, Hollywood supports thousands and thousands of jobs, millions of jobs.
Yeah.
How about the people who are employed directly by Hollywood for all these TV and, movie productions? Are they worried? And writer strike is a case in point, like you said as well. I know it's a big topic at the moment in US, but outside US, like you said, is Netflix worried? No, they got writers somewhere, I do not know, in Spain or somewhere in Brazil that are writing, leveraging AI, some creative content. I'm speculating. I do not know for sure, but I don't think they are worried.
No, I don't think they are. And in fact, I know just because like some of the companies that we are speaking to are selling to them. And, it's those executive decision makers that will ultimately always go down to what could cost and what produces better output. And it's that simple. And it's not unethical when you think about it like that. It's just how the world works, right?
It's capitalism.
So it's capitalism, and it's brutal, but that's always been how they've made decisions. You should never bet that they wouldn't make a decision in terms of what's best for the business. So we'll see. I think it's, long term, like I said, good. When you increase the amount of stuff, you increase productivity, there's more for everyone. The hard part will be like, where do the benefits go and how fast? Because you can't react, in the span of 6 months. That's how long, this generative AI buzz has been happening. And, it's just, it's really stressful to live in a world where it's already hard to be in Hollywood. And 6 months later, you could be really, truly out of a job.
Yeah, look, totally. I hear you.
Yeah.
I just want to make a quick point for our listeners that, what we are saying about capitalism and all that, it's basically textbook economics and capitalism, maximum utilization of minimum resources. And with AI, one can do that. Maximum productivity using at a minimum cost. And that means less human capital involved to get that same level of output. So what they're doing is not unethical. It's just the nature of the capitalist world we live in. See, a fair point. Now let's zoom in on your psychology as an investor. I'm interested to get your take because like you said, I'm totally agreement with you. AI startup land has become saturated. Even there's like a new idea and a new product getting developed every minute, I think, somewhere in the world. So I want to understand that as somebody who's joined the venture capital game, what are some mindsets and mental models that are guiding your approach to evaluating startups and founders among the vast ocean of the ideas that you are hit with in your email inbox?
This is an ever-present challenge, increasingly so now. I will say that the thing that keeps me focused is investing what I know I have a skill set in, which is also just a personal passion. And I think that I think the most successful investors realize this early, is like they realize what they're interested in, what they want to research, which feels like not doing work on the weekend, right? So I'm utilizing these tools in gaming because I want to, and then I kind of know what's next because I'm just using it. I'm already following. It's not work. Versus trying to do the same thing in healthcare, for instance, would be such a slog for me. I could never get interested, and I don't have any expertise there. But I have an intuitive understanding of what games may or may not be successful, and it's so hits driven that it's an alpha. It's real edge to be a gamer and to know and have played them yourself. So I tend to focus on where my passion takes me, and AI is such a sweeping field that you can really dive in however that suits. So that's mine. And then as it comes to evaluating, I think your point on founders and people first is just such the right way to be as an early stage investor. And then the second part I think is really about traction. And so I think about that because it's the wild west of ideas today. There's so much going on. If you can actually sell your product today, you're in the top 1%, right?
Yeah.
It's hard to monetize on productivity tools because everyone kind of expects it for free.
Yes.
And especially in a B2C sense, people don't really pay for it, So I think about what is actually selling. And it's, kind of an easy place to be as an investor. It separates quick, and then it's just focus on the passion and then traction. That's today in such an, broad ecosystem.
Yeah. Look, do you guys write checks during pre-seed round as well, or it's only Series A and so forth?
We do. Pre-seed is a bit harder for us. We tend to have just a certain higher level of conviction because our checks are bigger. So not to say we won't do it, but generally not. It's hard to get conviction on a pre-seed round like that.
Yeah, totally. I'm with you. Yeah, look, fair enough if that's the case. Tell me this thing then. And look, when I got into the world of venture capital angel investing, but I'll speak more about venture capital. One of the things that I noticed over time is that the effect of, I wouldn't say peer pressure, but the effect of network investments. So like venture capital investing is so different. So I got into venture capital in 2021. And before that, I was in wealth management. So I had knowledge more about making investment decisions based on macroeconomic conditions and based on the public information in hand for the stocks listed on the exchange. That is totally different to investing in early stage startups. When you're even a hedge fund, you make decisions based on purely what your analysis is, not who is investing. But in venture capital, if you are even investing in a pre-seed round, you are investing along with a lot of other deal flow partners that may also be, in some sense, your competitors, right?
Yeah.
In a way. So when I got into the space, like I knew about this, but when I got immersed into it and I started witnessing the effects, that was a whole different learning experience for me as an investor as well. Like how impactful and influential it is when you hear a fund that is considered a marquee crypto investment fund invests only small amount of their purse, but for us it's a lot because they're a $1 billion fund. So if they're investing 1% out of it, that's still a lot for us that are, let's say $10 million. So when they are investing that, it has an impact on us that, oh, look at that. They have invested in it. Now we are meeting the founders. Let's look that we should invest in it as well. There have been occasions when I've gone back from those meetings. I'm a professional, so I'm not going to name the fund or the startup, but like I've gone back from that meeting and I'm like, I can't believe that this massive fund have invested in this startup. Like I have no unbelief. And then when I'm consulting, because of the cosmetic effects that sometimes a venture fund wants to showcase, that they have also invested in a startup that has been invested by this top 3 venture capital fund of the world, you sometimes invest purely for those reasons. So my question to you is, and why I'm asking you this question is because now that we are seeing a crypto winter, a lot of the investments are becoming write-offs, right? For a lot of people, right? So I'm interested to get your take that as an investor in emerging tech and frontier technology, how do you maintain optimism while also critiquing and analyzing rationally when there are so many variables that are influencing your rational investment minds?
Yep, that is such a good question. And I just love the context there. Just, I want to underline, you really laid out kind of like the nebulous nature of venture investing. And it's so important to know as a founder, because sometimes an investment comes down to factors way outside of your control, like wanting to have a showcase name on your portfolio or, having a mixed reaction to things. So you never know what's in the background. And that I just think is helpful context. But as it comes particularly to investing with other big names, I think that there is some validity to it as a signal. So the first part of any investment is, can this be a $1 billion company? Can this be a venture scale startup? That's, A, and if you believe in it and all that. But the more immediate challenge always is, can this get funding in 24 months? It's another way to think about risk, right? Yeah. And so when you see other big names or you see a lot of other interest in the round, it really takes down your immediate risk to say, okay, this may or may not be a $1 billion company. That takes a lot of luck and a lot of long-term, but based on the signals I'm getting, I know this thing will last for another 24 months and get another round of funding, right? So when you have signals like an oversubscribed round, it's not just, oh, wow, everyone else likes it, so it must be good. It's everyone else likes it, so my risk of not getting follow-on funding is significantly lower. Yeah. And therefore the chance that it becomes a $1 billion company is higher. So that's a key part. I would say 2 on the big names is that a lot of the time they are quite good. There's a reason they are where they are. They're premier establishment. I think about a little bit of like a Stanford branding of, you can have brilliantly smart people from anywhere in the world who went to any school. But when you get somebody, with an Ivy League education, you just know that they hit a certain bar early on that's hard to do, right? Yeah. And you de-risk again. So when you think about it in terms of like true signal, you've got 2 great signals. One is that they cleared a caliber of, the people who get into Y Combinator. I think it's like 24 out of a couple thousand, right? It's a less than, it's a single digit percentage. Yeah. And then, you think about also the likelihood that they raise follow on and you're like, this is a good one. So do I consider it? Yes. But then you're also right of like, you definitely see startups like, how did this one reach that bar? That's always tough. But I know, did I answer the question? Because I feel like I've talked about 2 other things and not fully hit that.
I hear you, the point that you addressed based on the comment of the context that I gave. But yeah, the question was more that, how do you just look at things rationally when when things are hyped up. Like, so for example, at the moment, AI is hyped up. How do you ensure that your rational mindset comes in and takes over when you're hearing your deal flow partners writing big checks on this AI investment thesis? Do you get like, is there a way that you compose your rational mindset to overcome the hype?
Yeah, well said. So, interesting context here. I've asked a variety of founders from all over the world who they think is like the most optimistic, rational, ventures they want. What I hear regularly is that Americans tend to be the most optimistic.
Yes.
They're, always going to give you the benefit of the doubt of why they think something will be big and then need you to kind of prove it. Versus like Europeans, I hear, are like super skeptical at first. They don't believe it'll be big. You spend your whole time convincing them that like what you say is true is actually, is that it? Are they more like European?
Yeah, they're more like Europeans in that way.
Yeah. So I think we do live up to that. We take a very optimistic, and to caveat that, we say yes to very few investments. It's probably less than, 1 in 50, 1 in 100. First calls go to second ones. And I have the data to back it up. We made 3 investments this last 6 months, and I take about 15 founder calls a week. So simple math there is like you're saying no a lot, and it keeps you to stay focused. Where you stay rational is that you're oftentimes looking for those 1 in 100s. You're looking for the standouts. And so the bar is just so high that it just forces a level of like rationality. And it's kind of a bummer in a lot of regards, because you can talk to founders that have a great team, that's got product that look good, that, they speak well, the revenues make sense, and it's just not like blowing you out of the water. It's like, oh, this could be a good business, but I really just don't think this is the next Airbnb. And that's a disqualifier. It's kind of a bummer. But I think that the selectiveness forces rationality, right? If we can only make 3 investments, that's how I think, how many investments do I get to make? How many do I get to champion to my team? We'll probably make another 3 this year, probably investing somewhere around 6 million. That means I only get 3 bullets, and I have to choose. So even if I'm looking at 3 great ones this week, I have to focus that down, because that's what's going to get through investment committee. So I think that process that we have is very good. Forces some constraining mechanism. How do you say rational about opportunities? That's tough. I think it's depending on what stage you're at, equal parts arts and science. And so you don't want to let go of that art, right? Because a lot of the time it's those gut hunches or your read on a founder that makes $1 billion company. Does that resonate? I mean, how do you think about these?
Yeah, look, I'm in agreement with you. I'm just quickly, because you mentioned those 2 words again, arts and science, which comes from the first question, which was on your educational background. I'm interested to get your take as to how important your management science training in Stanford is helping you now as an investor. I'm interested on that.
That's a great. I think as a venture investor, you need to know a lot about a lot of things and have experience, and deep focus in a couple. And so I think the interdisciplinary degree is really good at that. I think, a lot of what I developed was this idea that creativity can be a skill, that, it can be a science, and that you've got data that also is a science. But a lot of that too is like management is people skills. It's intuiting, it's feelings, right? It's blending this, left and right brain. I think it's super important. I think you really can't discount intuition. Intuition is one of those things that it's hard to put your finger on, but like Daniel Kahneman, Thinking Fast and Slow, really talks about how so much of your brain is 80% of decisions are that like subconscious. And I think that's something to be tapped into rather than like fully put into a different box, especially because outcomes are so uncertain that, you have to account for some kind of X factor or unknown.
Yeah, I'd look totally with you, Danny, there. Totally. I want to dive into Decasonic a little. You invest in various technologies, as we mentioned earlier. What makes Decasonic unique? What is your edge?
That's great. I think our edge really comes down to our process. And you'll know it when you work with us, but we execute, big time. We have periods for every meeting. Every week we write ourselves, everyone on the team writes a weekly report card. How did we compare against last week's goals? How are we doing it this week? That's just our internal process.
Sure.
We don't ask the clients to do that, but we hope that they do, because when you get to that level and you're driving, 18 months later, you'll be amazed at how far you can get. And there's the right balance between, doing a lot and doing the right thing. That's always kind of the daily edge. But I think what makes us unique is that focus on operational expertise, getting stuff done, moving, shipping, and then also our unique focus on blockchain consumer, user applications. I think there's, if you look at A16Z and some of the bigger giants in Silicon Valley, they're taking a lot more infrastructural bets. They're saying, hey, the timing's not, we think on the other hand, what's going to drive adoption of infrastructure are killer apps, and we're out looking for it. And so as a fund, I think we really have much more of like kind of a user and product market fit focus than most. And that's fun. I believe in that ethos.
Sure. That's interesting because, I have also observed and heard from my DeFi network that A16Z and a lot of the other giants, they are making infrastructure bets. And part of the reason probably is because they believe in that protocol thesis. So you would be familiar with that protocol thesis, right? So I'm keen to, since you mentioned that you guys are more into investing on what would drive the adoption and investing on those killer apps, I want to get your take, like personally your take, and what is Decasonic's take on that protocol thesis? Because there are some critics to that as well.
Definitely. I actually disagree fundamentally with the FAT protocol thesis. And I think that's somewhat a hot take. It depends on like who you're talking to and what. But I think it goes back to that point of like decentralization. Of like, if you really think decentralization is in and of itself the end all purpose, then invariably you're gonna have a FAT protocol. If you're thinking of blockchain as a mechanism for better user, for solving user pain points, it's less so. And so the moral of the story is I've spoken to a variety of Web3 marketing platforms. They don't tell you this, but they're using NFT technology to help, give you collectibles, interact with a Marvel studio, and then you can take those and, get a discount at McDonald's. And they have all these different ways of interacting and creating and buying. That's all very Web3. It's equal parts on-chain, off-chain, but none of it's FAT protocol. It's actually, very slim protocol of like, hey, there's a minting process. It's identifiable. And the rest of this is like still in a consumer application. It's interoperable, but it's 80% in the consumer apps, whether it's Warner's, McDonald's, whatever. So I think that's how it's going to look. That's my take. I just think that the FAT protocol relies on too many assumptions that have been proven, in my mind, untrue over time. And so it's going to depend. I will say that there are certain things like decentralized physical infrastructure, DPIN, is a particularly good use case for FAT protocol, right? So you can create a network of EV chargers very well and have the consumer interface be super light and all of it be back end. That makes sense. But we're investing in are the opposite.
Got it. So look, at the expense of sounding as a Bitcoin maximalist, I'll say that I used to believe in the concept, in the theory of FAT protocol thesis. It made sense to me, but ever since Ethereum moved from proof of work to proof of stake, it's now relying on its first mover advantage and its network effect to differentiate itself from other layer 1 blockchains. And so to me, over time, I feel that protocol thesis is not going to be like it's not going to hold value over time. And why? Because we're going to live in a world where we're going to have layer 1 and layer 2 blockchains become more of a commodity, where there is hardly any differentiation between them. Like, yes, speed will matter and all that matter, but it's going to be like how we treat Uber and Lyft as more of a commodity app. I've got both of them installed. Whichever one comes first or whichever one is cheaper, I'll use that. I think over time, blockchain networks, smart contract blockchain networks, except Bitcoin, they're going to be commoditized, where it's only going to be which is cheaper and which is faster. That's it. Just like how we use Uber and Lyft. Like, correct me if I'm wrong, but in Australia and in India, nobody uses Uber because they are a fan of Uber. They've got all different, ride-hailing apps installed on their phone, and whichever one comes first or whichever one is cheaper, they use that app. And I think same is going to happen with blockchain, like layer 1 blockchain over time, thereby undermining the FAT protocol thesis. So I agree with you. That's going to happen over time.
What do you think about app chains and like blockchains built specifically for specific apps and use cases?
Yeah, look, it's a very recent development when you think about it, like app chains. I do think that it's a good experiment and it'll probably see adoption among certain segments, like gaming is probably somewhere where you can see value for it, but I doubt it's going to hold value when we move towards the decentralized finance. The whole concept of decentralized finance is that it is decentralized. And if the blockchain network is not decentralized, then what's the point of using that protocol? Uniswap, I'm a big fan of Uniswap. At the moment, Ethereum is decentralized, but we'll see over time how its proof of stake model and the impact of the Lidos and other staking networks, how that impacts the overall Ethereum network. It's going to be interesting how that development plays out. But yeah, look, app chains, I think it is a good use case, but yeah, it's an interesting development. We're waiting to see which segments of, practical use cases it would apply to and gain user adoption. But I think Web3 gaming, we might see app chains being powerful for Web3 gaming. What do you think? Since you asked the question, what are you thinking about it?
Yeah, no, I'm actually just fully on the same same page. I think probably the bulk of the opportunity in Web3 in the next 10 to 5 years will be the financialization, bringing things on chain. And I think for that end, you wouldn't ever want an app chain, right? You want one interoperable protocol rather than a million side chains. That's just the same thing that we have today. As it comes to specific use cases, you're totally right. Maybe Web3 gaming has some applications. Others do as well. It starts to blur the line of like, okay, if you've got an app chain, is this then a private chain? If then, why not just use a database? There's some middle ground, I think, that will actually really be, useful, but I have no strong thesis on it other than I think, would that represent, my question back to you is, would that represent a fat protocol thesis or like a skinny protocol?
I think, look, since you put me on the spot and I'm trying to think fast just now, I think that would be a slim protocol thesis.
Yeah, I agree. I'm on the same page of like, you're basically building a back end for your own consumer app. It's less protocol related. It's just kind of your own back end.
Absolutely. Yeah. Back to Decasonic, like I'm interested because this is a question that a lot of students ask me and I get them my answer, but it would be great for my audience to get this take about Decasonic, which is that how does the whole investment process work? So let's say somebody hits you with an email, asking that, hey, this is the pitch, you liked it. What happens after that? Walk us through that process.
Great question. So as it comes to outreach, we get outreach from, a variety of sources, a bunch on LinkedIn, direct LinkedIn messages, a bunch through our website, a bunch through our emails, and then referrals from other networks. I think the referrals always stand out. If you can get a referral, you're just a cut above. Same thing with resumes, etc. It's just 10 times better than a cold email, although we do evaluate everything that comes our way. So that's step one. Step two is I'll do a quick read of the deck. And when I say quick, I mean, it's resume type quick. It's 2 minutes. And just, I'm interested particularly in the blurb, kind of the founder, key highlights. Really good people who know how to fundraise will often include kind of the summary, the team, quick highlight, what they're raising. There it is, right? It's just as quick. It's helpful to yourself of like, you don't need to give everyone the pitch. Some people just aren't the right fit. Best to put that up front. I'll go through the deck. If that confirms what I'm already thinking of like, yep, this looks like an interesting opportunity. Quick read, it matches up with what I thought it was in the paragraph. Let's set up a first call. First call, 30 minutes, and it's intro, bit on us, 10-minute generally, ideally 10-minute pitch, 20 minutes Q&A, and you can also ask questions throughout. Sometimes founders will take that whole 30 minutes to do a pitch, and I think that's a waste of time. I think generally, if I've read the deck and I've got it, I understand what the business is, generally as just founder advice, let the investors talk more. They'll tell you what their things are, and you can just address them directly rather than having to guess and try to hope that you have the most perfect 30-minute pitch ever. It does happen. It's just a little bit easier to get straight to the meat. From there, it goes through our investment committee. So I'll bring it to the rest of my team. That's Lauren and Paul. We're the IC of 3, and I will champion each deal. And that's oftentimes how it goes. So you as an associate or, junior, if you're not a partner, you're championing deals. Your job is to go source it. The deals that you bring to the table are ones that you're putting your name behind, right? Yeah. So if you can get that far, it's meaningful. It means that you have somebody in your court. That point of contact is championing the deal for you. And the team will come back with their own questions saying, what do you think about this? Can it take? Sometimes it can be super quick. Great. Sounds like an awesome one. Let's set up a follow-up call. And sometimes it'll be a little bit more of a thesis-oriented, hey, should we even be really considering this opportunity? From there, it'll be another 30-minute opportunity. You'll meet everyone on the team. And that's a chance for everyone to kind of come with the questions that they had in investment committee and, talk with the founder about it. We'll generally pre-send those. And so we always look for pre-reads. We send them in return. So we'll help founders, kind of answer those questions and above. From there, you're now in DD process of like, okay, we've had a great chance. The DD process for us can take anywhere from 3 to 5 weeks. And that is basically going out, understanding the questions and the risks that we see and trying to de-risk those. So it's a nebulous thing. It's different for everyone. But for us, it's a little bit less so focused on like the founder, their exact backstory. We don't do super deep dive saying, oh, does everything they've ever said lined up? And hey, they've got this 1-year gap on their resume. What were they doing then? It's completely not that. It's much more so, okay, we identified this is a great game. This is a great whatever. What are the biggest risks? Well, market size. Can this be a hit? Oh, I think it can be because it has a great streamer. Okay, let's go see what their audience is, what the audience is saying. I want to read on Reddit, Twitter. What do people say when he talks about NFTs, right? De-risk, because one of the biggest risks for us would be, is this a hit game? Can the streamer sell this thing? If we can answer those questions, then it's a matter of negotiating. From there, we'll generally come back with lead terms, and then the process can be, go back and forth. If you're getting terms on the table, that means the whole team is with it. You wouldn't get terms if you won. We also sometimes will do like a 1 to 2 day on-site, which is come the whole team 8 hours, maybe 1 or 2 days, where we go through the entire business plan and try to push it to something where it's like for the next 18 months, you know exactly what you need to go do. And so different at different stages, but that's generally times helpful because we're investing in particular about, like I said, what this could be long-term, and then also where's this going to get to? You know, in 18 months, you'll need to raise more money. Where do we want to be? Lay those goal points out pretty succinctly. If they change, they change, but at least you know for the first month that you're driving at something. And so that's the process. Yeah, and it can be quick. Sometimes when it's competitive to get into a deal, which good deals are, we can do that in a week, you know, which is a lot of work on my end. Those are like small diners. But those are the fun ones too. Those are the ones that are good and worth it.
Yeah, totally. Look, that was a great, holistic, concise articulation of that. So thanks a lot for sharing that with us. I'm interested to get your take, since you've mentioned a couple of times during this episode around, streamers and creators. So I'm interested to get your take on how powerful are creators now in, let's just say, gaming space. Let's not take it holistically, but how powerful are creators in terms of driving user adoption, but also in terms of getting investments from venture capitalists like you? How influential are they?
Well said. In my world, I'm gaining increasing conviction that they're vital. Just some data points, right? I mean, most every AAA game these days will go to Twitch and do a X number of hour buyout where they'll buy every streamer in a certain category. Everyone will be playing it. So Battlefield will do that. Call of Duty will do that. You know, I think if you're not doing that, you're just missing out on like those organic moments. Like these streamers are so influential that I think you shouldn't be launching a game without a unique partnership. And I think the smartest studios, in particular Web3 studios, because they're so innovative, they're so community oriented, are gravitating towards streamers. But I think every game should launch with a streamer. They should know who they're targeting it. They should have exclusive affiliate passes and be marketing it through them, because it's all organic growth. It's all so authentic. Like no studio will ever replace the relationship that users have with their favorite streamers, and that authentic when you see them playing it. On the flip side, I think games should be developed for streamers as well. Like Among Us, part of its huge success was it was a fun game to stream. Battle Royales are so much fun to watch because every game is exciting, and then streamers play it more because Call of Duty is whatever. I just in and out of games. You play for a living, 12 hours a day, you get bored really quickly. Whereas Battle Royales make every game interesting. I think that is in large part why the category has succeeded to the extent it does. So these are all a few data points that all I think bubble up to the fact that streamers are so important, creators are so important. I think that also extends to a variety of other industries. We're also thinking now about like VTubers and completely AI influencers and looking at a couple investments. But I think that's the marketing strategy for almost every team. I think it's like the key to a go-to-market.
Do you just now we spoke a little bit about that protocol thesis, and like there was a time that I used to believe in that thesis, but now, as I mentioned, I believe it's going to be undermined over time. Similarly, do you see a future where creators are going to be less influential, or at the moment, like for me, I can't imagine. So if somebody asked me that question, for me, I just think creators are going to increasingly become more influential over time. I think they are, just like how I believe that gaming market is still undervalued. I believe creator economy is super undervalued, and we're just getting started. Like creators are just getting started. But interested to get your take. Like, do you see a future where their influence is going to diminish?
I don't. And not to be, not just to agree, but I really don't. I think more people be creators. Generative AI in particular is kind of a why now moment for creators, because the creator economy has been talked a lot about, starting with its origins in like more of the gig economy, with the advent of Ubers and, sharing apartments at Airbnb and stuff. And then now into creators. The kind of the recurring theme is that only 1% of the world is creators. So like if you, it's the same across Twitch and, OnlyFans and artists. I mean, it's kind of the 1% that create. I think they'll become more influential. I think there's a chance that expands because more people have access to tools, more people can be creators. So like 2 to 3%, but which kind of says the influence is dispersed. But as a category, I can't see a world in which influencers are less, influential. Maybe TikTok is a good example. Just to play my own devil's advocate, TikTok said it's not about the accounts and the followers, it's about the content. And each content is an exclusive single hit, and TikTok's algorithm is exclusively oriented around that. That being said, this is still all, in my mind, like user-generated content. What's winning on TikTok? I would call anything that's that's on there is creator stuff.
Exactly.
Outside of that, you've got, so I still think, and TikTok marketing continues to go through the roof. Instagram shopping continues to grow. So, the counterpoint is, it's maybe not the creator brands themselves, but the content they have. But as a piece of content, user generated content is like, far and away like the most engaging. And
Yeah, totally. I'm with you. Yeah. I was also on the same page about user generated content and creators as that category. Like, I don't see a world where their influence is going to be less. It's just going to continuously increase.
Yeah.
Lastly, Danny, like, you're based in Chicago. Chicago is known to be the CTA capital of the world. A lot of commodity traders, a lot of just trading firms there. So it's not necessarily spoken about from a venture capital angle globally. But I'm interested to get your take still. It's like a massive finance hub, nevertheless. It's a massive economy, nevertheless. It's like Chicago economy can counter some of other countries' economy as a whole. Got a massive GDP on its own. So how do you see the venture capital ecosystem of Chicago evolving versus, let's say, Silicon Valley, especially since you were educated at Silicon Valley at Stanford? What are the advantages of being located at Chicago?
Good question. You're so right on like the orientation. It's a very trading focused, quantitative finance world. So a lot of my peers actually are, the Web3 crypto VC wing of larger trading firms. And so, I see that played out all over. I think that the advantage is that you can have different perspectives. If you're in Silicon Valley, there's a zeitgeist, like there's a narrative. The conversations are dictated by few, and then you're encouraged to get in line. And I think that having access to those streams of information globally means you can tap into that as much as you want, but you're not marinating in it, good or bad. There's an argument to be said. I think that the density of smart people and founders in Silicon Valley is like all but impossible to replace, even still, especially with AI. There's kind of like a why now moment of AI, but in Silicon Valley that I think is worth tapping into. Okay. But as it comes to being in Chicago, I think you have all the advantages without kind of like living and breathing it in this echo chamber. So I like that. Subtly too, the time zone is helpful. It's just easier to connect with like Europe, everyone else. So that's helpful. And then we all have a Silicon Valley mindset. So Paul, he spent 9 years at a VC fund on Sand Hill Road. Obviously I went to school on Sand Hill Road. And then Lauren, my colleague, she's from the Bay Area as well. So I think we like to think we export that Silicon Valley mindset.
That's awesome. Yeah, look, I'm familiar. Doing my time at NYU helped me to understand the different tier one city cultures. Austin, Texas has its own culture. Silicon Valley has its own culture. Chicago's got its own culture. Seattle has got its own culture. And it's interesting how all those cultures converge at times as well. It's very interesting. Look, Danny, I can't thank you enough. It's crazy. 90 minutes just flew by.
I know. I mean, it's 90. Wow, that's incredible. We're almost there.
So look, Danny, this was great. I really thank you for taking all the time to do this. This was a great discussion that we had on a lot of different topics. However, the segment of this podcast episode is not over. I know that you said that you've watched a few of my episodes already, so I do not know whether you're aware that our final segment is the rapid fire segment, where I ask questions where it is like warrants only 1 to 3 word responses or yes or no responses. So if you can, like, brace yourself, if you're ready, I'll ask you a few rapid fire questions.
Let's get it. I feel like Kramer in the hot seat right now. Lightning round.
Cool. Okay. So the first one, most underrated Web3 platform right now.
Friendtech.
I haven't released this episode, but there is he's one of my very close friends. He writes the DeFi report. He's the founder of DeFi report, Michael, and he's come the most on my podcast. He's come 3 times, and we cover Friendtech. It is underrated, but I do not know how long it'll last for. That's just my 2 cents. It's
exactly.
Pretty wild west.
If I can also, I'll caveat it. If I could have another, if asked me the question now, I think I'd also say the Fed Now program.
Yes.
People aren't talking about that enough, and it's really like the meat and potatoes of like Web3 for finance, and the Fed did it, So if you ask it again, I would actually change my answer. On the Friendtech, I just more so think that like it's easy to poo-poo, and do I think this is going to be long-term? Not really. But it was like a true Web3 like social app that, I don't know, it's so easy to poo-poo, and I just think that they had more success than people let on. Is it long-term? Is it durable? Time will tell. It's so hard to sustain networks. They had meteoric growth, but same with Threads, but to have succeeded in that level, to be on people's name, if Friendtech was a portfolio company of ours, it's not, but if it was, I'd be very proud of like what achieved. So in that regard, I think it's underrated.
I totally agree with you that. I'm 100% agreed with you that. And that's the discussion that I had with Michael as well, that because of the success that they've got, there is something out there to learn from them, like that can be applied to refine that whole concept. But there's something there to learn from them. So on that, I totally agree with you. Right. What's an emerging crypto asset more people should know about other than friend tech?
I would say like smart wallets.
Smart wallets, yes. Got it. Any smart wallet in particular, or just that concept, Scott?
That's the concept. Yeah.
I'm with you. What skill is most undervalued by founders today?
Oh man, tough one. I know I'm not going faster. Give me a second, and we can re-ask this question. Skill that's underrated today. Okay, I have it. It's. Do you want to ask again, or should I?
Well, just say.
It's selling and pitching with conviction.
Fair enough. What's the best advice you got when you were starting out as a VC?
Listen more and talk less.
Great advice. I think that advice applies in general. If somebody can apply that advice, they'll do well. I strongly believe. So great advice. Who gave you that?
That was my dad. Yeah, he was a venture investor on Sandhill for 10 years, and that was day one advice.
Oh, so he was in military, but then post-military career, he was an investor in Sandhill.
So my dad nor my mom, neither of them were in the military. But I have 6 uncles that were, a variety of cousins that were, brothers in the military, and my grandparents were in the military. So that was the military. Yeah.
Got it. If you could pick any historic mind to have debate on Web3, who would it be?
Steve Jobs.
Steve Jobs. Yeah. Great pick.
I would curious to know if he thinks there's any kind of product angle to it. I can see him just poo-pooing it entirely, or I can see him being like, wow, everyone is sleeping on what is obviously this use case. Everyone talks about there needing to be like a Steve Jobs for the Web3 to figure it out. And I'd be curious what he himself would say.
Yeah, no, that's a good answer. That's a great answer, yeah. What philosophical dilemma keeps you up at night?
Oh, great versus good.
And what the right balance is.
You know, our mutual friend Rachel, she gave me a good learning, which was perfect is the enemy of good or great is the enemy of good. It was one thing like that when she made that statement, and I was like, that's very profound.
Yeah, my dad says that regularly. You know, perfect is the enemy of very good.
Perfect is the enemy.
Yeah, I see it all types of ways, but this is the speed round.
Yeah. Yeah. If Web3 succeeds, what parts of the human experience will be lost, if any?
I think there will be less trust, blind trust in institutions.
Yeah.
And that can be good or bad.
Yeah, true. Could have both sides. What technology excites you that no one's paying attention to yet?
I think the Apple XR's headset is not being talked about enough. I think it's going to change the way we work.
Answer. Yeah, it's a very good answer. All right, so here comes the fun part of the rapid fire round. Which Web3 founder would you trust to house it?
My friend Jed is a remarkable founder. He reports so regularly with great investor updates that I'd be like, my house would be safe, and if not, he'll be very transparent about why.
I purposefully put this because I think you would agree to this. Web3 is plagued with a lot of bad founders as well. So that's why I purposefully put Web3 founder.
Oh yeah, definitely.
If you compared layer 1 blockchains to ice cream flavors, which one is vanilla and which one is rocky road?
I think Ethereum is vanilla. And oh man, there's so many rocky road flavors out there. Which one? I would say maybe Helium Network is rocky road. Yeah.
The less I talk about Helium Network, the better. But yeah, I'm in agreement with that. What's the most ridiculous Web3 pitch you've heard? And I know that you would have heard a lot of them, but one that comes to your mind.
Oh man. So many. One that was just so ridiculous that I even forget what it was. I mean, like I had to delete it from my mind. I was like, this was who out there. I would say like more recently, there was one founder looking to recreate Jerusalem in a metaverse and had a native token backed in gold called the shekel. And it was this like religious experience metaverse, but you're in ancient Jerusalem. And it was at $1 billion valuation.
Yeah, no comments, man. I don't want to comment.
No.
Because I do not know how it will get out if I comment about it. So no comments. That's a good answer.
That one was like, wow, bro. This one, yeah.
What's your hidden talent outside investing?
I am really good at ping pong.
Yeah?
Yeah. I play in tournaments outside of work and am kind of a pool shark as it comes to any like game you could play at a bar.
Got it. Nice. What random fact fascinates you?
Oh, that Cleopatra is closer in timeline to the Wright brothers inventing flight than she is at the creation of the pyramids.
Oh, wow. I didn't know that.
Yeah, exactly. That's
random, but at the same time, I need to go back in time, and that's so interesting. I didn't know that. Wow. Okay.
Yep.
What oddly specific skill would you excel at in a hypothetical zombie apocalypse?
I would be a really good drone coordinator. I think that drones would be vital in tracking zombies and potentially taking them out. And I'm really good at flying drones and, would orchestrate a drone counterattack.
Got it.
Yeah.
Oh, Danny, this was such a pleasure. I had a lot of fun. How was your Proof of Work podcast experience?
Loved it, Shiv. Thanks for having me on. Such great questions, such an interesting banter. You're obviously so insightful. So I feel like it's leveled up my ability to articulate just by being on this with you. So thank you so much, man. This has been great.
The pleasure was mine, and I look forward to having you more often. Let's say after a few months, so that we can navigate and look back on our discussion that we had a few months ago and how the industry has progressed. It's just a good exercise. So I too really had a lot of fun in this episode, Danny. So thanks a lot for being a good sport, being candid enough to answer a lot of these silly rapid fire questions as well, and just opening up.
Yeah, my pleasure. Yeah, truly. Looking forward to the next time.
Amazing.